What's up, everybody? Welcome back. Happy Thursday. Got a lot to cover in the markets today, including the news of, actually, believe it or not, the first ever insider trading prosecution in the U.S. related to crypto. It's big news. I did not know that. A bunch of other interesting stories, including what the Tether co-founder thinks about the future of algorithmic stablecoins. Sit tight, hit the like and subscribe button if you enjoy the content, and don't forget, you can always skip around using the timestamps in the bottom description area beneath each video. Let's begin. Markets, so kind of flat in the day, up slightly, 30,200, sort of expected. It's always going to be kind of a zigzag pattern, up a little, down a little, up a little, down a little. No major movers on the day, everything kind of in line. All coins, Bitcoin, pretty much the same. Let's move on. So, I've stated on my show before, technical analysts, there are some good ones, maybe about 5 or 6, half a dozen. A lot of them, though, if you do the exact opposite of what they do, you'll consistently make profits. Unfortunately, that's just the way it is. So there are some good ones, but most of them just do the opposite of what they do. You'll be profitable in the long run. So, in an era where a lot of technical analysts are like that, and Maren Altman is just a breath of fresh air with her and her astrological-based charting and trading. And people are starting to kind of notice her. She's really gaining a lot of buzz. So, I've featured her a couple times before. If you're not familiar, she does astrology-based charting. Not sure if the sound is working there. Here she was last week at Davos, spreading her brand of astrology trading amongst the world's elite. And then, what else do we have here? I think she was also playing with some snakes. She was playing with a python in Greece. She's just all over the place. But anyways, other people are starting to notice that she actually is pretty accurate compared to most technical analysts out there. Here's a message post on a message board here. Spent years studying blockchain, only a bag hold, and find scams, lose 90%, blah, blah, blah. Meanwhile, some random 23-year-old girl on TikTok has managed to call every top and bottom with her pure feminine intuition and cement herself as a crypto influencer and has probably made a few million already. See, she's not 100%. Sometimes her predictions aren't, on, but she's right more than she's wrong, and she's more accurate than a lot of technical analysts out there. So keep it coming, Maren. Let's move on here. This is the cover story of the day. So the OpenSea, so this happened in September. The OpenSea executive was fired, and then there was an insider trading prosecution going on related to him and NFT sales. So he has been officially charged, but this is pretty surprising. So I guess this is the first ever insider trading prosecution in the U.S. related to crypto. I did not know that. Obviously, they've gone after rug pulls. They've gone after, investors misappropriating investor funds or using false marketing pretenses to raise investor funds. They've gone over that, but they have never actually prosecuted anyone for insider trading in the U.S. in crypto. So this guy here, the OpenSea product manager, that was his job title, Nathaniel Chastain. I guess what he did, I'm not too familiar with OpenSea to be honest, but I guess when projects get put on the homepage, then their value and price immediately skyrockets. So as the product manager on the marketing team, he knew ahead of time which NFTs were going to be highlighted on the front page, and then he knew which of those would, obviously, their price apparently goes up about fivefold every time a project is placed on the homepage. So he knew which those were ahead of time. He bought them initially before they went on the homepage and then sold them afterwards at 5 times the price. So he's been charged, first time ever insider trading in the U.S. It's interesting. Presumably, I guess the one buyer, one seller aspect of NFT, that was probably his downfall here, but it's good. We don't want insider trading in the markets, so it's good prosecution there. Let's move on. Some exchange news here. Gemini is cutting 10% of their staff. So exchanges, some are spending a lot, some are not spending a lot. Gemini, they've always been kind of a middle-tier exchange, catering mostly to the institutional crowd. They've never really been a top 4 or 5 exchange in terms of volumes, but they've never been outside of the top 10, really. They're laying off 10% of their staff. Just poor market conditions, crypto winter, etc. They initially said they were just going to scale back on hiring. Now they're laying off 10% of the staff. Not too surprising. This always happens in the bear markets. Fidelity, on the other hand, they are hiring. So they do have a crypto division, a digital assets division, and employs a full 200 people right now. I did not know that. They've been focusing mostly on crypto institutional-based products since then, and now they're hiring 110 new people. It's a lot of people. They haven't said exactly what the new hires are going to do within the digital assets division, or whether they're going to also kind of develop some products targeted towards the retail crowd. Not quite sure, but the fact they're expanding, that definitely shows demand. It's good news. They also announced recently they've added Bitcoin as an investment option for 401k retirement plans. That was the first time any company had done that in the U.S. Let's move on. So South Korea invests over $177 million in the Metaverse. So on the surface, it doesn't really seem like that big a deal, whatever, but it is a big deal because South Korea, most people don't know this, and I can't find any stats to back it up, but the run-up in 2017, so this run-up here, this was the highest 12-month rise of any year in crypto history. It even beat the 2020 rise here and the 2021 rise there, and this was, South Korea was leading the charge. The trading volumes within crypto, South Korea was the number one highest traded country. The most trading volumes were coming out of South Korea. And the U.S. was number 2. So for a small country, it's about 20% of the size of the U.S. That had the single highest trading volumes in the U.S. That's pretty remarkable. So the fact is, basically, in other words, South Koreans, they trade frequently, they trade fast, word of mouth just really catches on with them. So they were pretty much responsible for the bull market here. It was less the U.S., more so South Korea. They haven't been quite as involved since then, because of the hoopla and mania back then in 2017. The government enacted a bunch of regulations. They banned ICOs. They banned a bunch of other things. And then South Korea sort of, like China, kind of lost its allure in the crypto space. Their trading volumes are, I think, still in the top 10. They're maybe number 7 or 8, I want to say, but they're nowhere near the number 1 most traded, most heavily involved crypto country in the world, the way they were during the 2017 run-up. So even with all the Luna fiasco, Luna was a South Korean company. Remember, the government that's good, they're still plowing forward here, investing $177 million in Metaverse projects. They don't really say why they chose Metaverse, but they did say the Metaverse is an uncharted digital world with endless opportunities. That's good. They're really talking crypto. They're talking in retail terms here. Maybe add some rocket ship emojis after that, and that'd be good. It's good. They're really getting into it. I like that. And then before the Luna fiasco about a month ago, they said they were going to remove their long-standing ban on ICOs. Now, they haven't made an announcement related to this since the Luna fiasco, which could certainly change things, but the fact that there was positive news related to them investing in Metaverse projects, that means the government is still pro-crypto there, even after the Luna fiasco. So that's good news, because they have shown more than any other country that retail traders really get stimulated there, and they can really cause bull runs, more so than anywhere. Let's move on. Binance. So in terms of the exchanges, so Gemini is cutting costs. Binance, never short on cash or crypto. Always spending. Binance and artist The Weeknd launching a Crypto Power World Tour. So this is The Weeknd's stadium show and stadium tour in the U.S. and Canada, kicking off in the summer. This is not arenas. This isn't like basketball arenas. This is football stadiums, 100,000 plus people. This is the biggest concert tour of the year by far. This is huge. So Binance sponsoring that is a pretty big deal. They don't give the price tag. I would probably ballpark it at maybe $20 to $30 million, just randomly guessing. So no drop in the bucket. Does kind of give you a hint at the sort of crowd Binance is looking to continue to target, the retail crowd, basically, the young trendy crowd, 20s crowd, all ethnicities, and then just brand at the same time. You get all those stadium tours, you just have your brand right there, even if it doesn't convert everyone to a crypto trader, just, splashing the Binance name and logo in front of 100,000 people at concerts. It's going to go a long way. Let's move on. Tether co-founder says UST disaster spells doom for algorithmic stablecoins. So on the surface, again, this article wouldn't seem that interesting, but Tether, they have been around since 2015. This guy, Reed Collins, he's been the CEO since 2015. I don't know if he's still involved in the company. I'm not sure, but he did co-found it in 2015. And as I've long said, the people who have been around the most bull and bear markets are just the people who know the most in the space, and you should always trust their opinions over other people's opinions. They're not going to be right 100% of the time, but they've just been around more cycles. They're going to be right a larger percentage of the time, in my opinion. So what does he think of algorithmic stablecoins, since Tether has been very successful as a reserve-based coin for 7 years, market cap $65 billion, never had any major problems, haven't really lost their peg below, I think, around 90 cents once or twice, and it recovered since. And that's pretty good in the world of stablecoins. So what does he think of the Luna disaster? He says, we have not seen the worst yet with algorithmic stablecoins, and then other stablecoins are going to follow UST and implode in dynamic fashion. He also says he's compared algorithmic stablecoins to the fountain of youth or the holy grail. Others have referred to it as financial alchemy, as in people talk about them like they're the greatest, sexiest thing in crypto on the face of the earth. But for the most part, they're just going to implode, he thinks. So, yeah, but this is interesting because the funds that people are not getting scared away by algorithmic stablecoins. Even with the Luna implosion, you'd expect people to pull their money out of the existing algorithmic stablecoins and put them into Tether, put them into USDC. People are not doing that. New algorithmic stablecoins are coming out every day, so investors are not getting scared off, and he predicts that there's going to be more implosions. He also predicts, obviously, with Referral, watchdogs yet to reveal how they plan to regulate stablecoins, but they will likely introduce policies requiring stablecoin issuers to use tangible assets as reserves for their tokens. So basically what that means is instead of just listing the broad categories that all the reserves are in, like 80% of the reserves are in cash and cash equivalents, 10% are in junk bonds, 10% are in senior secured debt. Now they're going to have to actually list out what each specific sort of debt or cash instrument, all that 80%, 10% goes into. So a full detailed breakdown. Sticking with the algorithmic stablecoin, so USDD, that's the Tron one, which has been very successful in the last month, even with the Luna fiasco, even with its algorithmic pegging being the same sort of mechanism as Luna. Investors are not scared off. Tron has been the best performing coin in the top 100 in the last 30 days, due almost entirely on the USDD launch May 2nd, right before Luna went down. So it's USDD, it's ranked number 70 in terms of total market cap. Market cap is $670 million. So investors are not getting scared away. So it'll be interesting to see how these shake out with the remaining algorithmic stablecoins. It's a risky move. Obviously, Justin Sun, the Tron founder, he's living a pretty good life right now. He's worth hundreds of millions of dollars. He's got no major problems whatsoever. I mean, this isn't just like if he starts a new project and it fails, that's not a big deal. If he starts a project like this and it has a dynamic implosion the way Terry did, then that's a big deal. And he's living a pretty comfortable life right now, so he's worth the risk. He's excited about it, and so far the market has agreed with him. We shall see. So for now, I'll be back tomorrow with a new episode. Ben Crypto signing out. Catch you later.